It's about that time of day again. Welcome back to Nightly Newsletter, boys and girls. Joseph James here. Tuesday evening, May 3rd, 2016. Cruising our way through this first full week of the month of May. Another exciting newsletter for you tonight. Crude, S&P, gold, and the euro. With some major news on the schedule for this evening and tomorrow morning, we can easily see a calm before the storm sets in. Crude and the S&P are both trying to turn the corner from bearish to bullish, while gold and euro are both strong to the downside, assuming, of course, this news out of China later on tonight doesn't shake things up too badly. Got another exciting newsletter video for you tonight. Don't forget, the only place to watch the full-length version of our nightly newsletter is here on our trading blog at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, there's a link in the description of the YouTube video that will take you over here to our trading blog. While you're here, don't forget to grab a free pass to come out and join me in the trade room as a guest for a few days this week. In the lower left-hand corner, you can register as a member of our mailing list. I'll send you an email every evening when our nightly newsletter is ready to be watched. Below the video, you can download all of the charts that you see me using in tonight's video. Grab a copy of all the charts below the video. And then over on the right-hand side, I will encourage you to learn more about what it means to be a student here at schooloftrade.com. Join the free trial membership on the right-hand side. And don't forget to hit me up here in the office in Los Angeles if you have any questions. Use our live support button over on the right-hand side. Hope you guys are having a great day so far. Busy week here. Before we check into our charts, though, let's take a look at what the schedule is for tomorrow, May the 4th. Of course, we're going to start off with news out of China, 9:45 p.m. this evening. We have the General Services PMI, the Purchasing Managers Index. And of course, you know, Chinese data always very important, 9:45 p.m. Eastern Time. The big market movers off this should be pretty much S&P, gold, and the euro. Crude shouldn't be too adversely affected by it, but you got 3 out of 4 markets that will be significantly impacted by that news later on tonight. If you're trading in Asia, Australia, or early tomorrow morning in the London session, please be aware that General Services PMI at 9:45 p.m. That's going to be the big news of the overnight session. Tomorrow, Wednesday, April 4th, we got kind of a collection here of PMI data coming out of Europe, 350, 355, 4 o'clock, and of course 4:30 before we hit retail sales out of the EU. So a ton of news starting tonight at 9:30 p.m. Eastern Time out of China, and then rolling right through the gamut as we start off at 3:50 all the way through 5 a.m. tomorrow morning in the London session. So be aware of that news. And of course, don't forget, we will trade around the news, right? We do not trade the news. The news is noise. Going into the U.S. session, we have the ADP employment report. That'll be important ahead of Friday's non-farm payrolls. That'll be the first news event of the morning session in the U.S. session after 7 a.m. Eastern Time when the unofficial start of the U.S. session kicks off. Now, don't forget, tomorrow morning, that ADP employment report is going to be a leading report ahead of Friday's non-farm payroll number. It doesn't typically have a very big impact the day of the report, so we don't expect to see too much impact in the markets tomorrow morning, especially after all the chaos in the overnight session. But again, 8:15 tomorrow morning, there is news. We do not expect it to have too much of an impact because it is more of a leading indicator ahead of Friday's news report. The big news, though, tomorrow morning will be coming later in the session. We have 8:30 international trade. Not going to worry too much about the merchandise. We got factory orders at 10 o'clock. And, of course, the petroleum status report. So big news tomorrow morning, 8:30 a.m., 10 o'clock, and, of course, 10:30. Don't forget, sitting on hands 5 minutes before and 5 minutes after each news event. We'll trade right around it. And please don't forget, if you're trading crude oil tomorrow morning, 10:15 a.m. is the cutoff. Ahead of that news report, it does get very low volume and very whippy ahead of that news report. So 10:15, we take a time out. We'll wait until at least 10:40 a.m. after the inventory report comes out until we start looking to trade that market again. Anything after 10:15 on Wednesdays, though, I always classify as gambling if you're trading crude oil. So please be aware. Every Wednesday morning, 10:30 a.m. Eastern Time. The cutoff is 10:15. And again, everything after 10:15 is gambling because after that news comes out, Whole lot of people buying highs and selling lows and taking big risks in an illiquid market after 10:30 on Wednesdays. Give it at least 10 minutes before you try to tackle that wild animal tomorrow morning at 10:40 a.m. Now, don't forget, we're going to take a look at all this news tomorrow morning live in real time. We open up our trade room tomorrow morning at 8 a.m. Eastern time, and we're going to go over all of the news on the schedule tomorrow, and we'll put together a plan like we do every day with all of our students. So remember, you don't need to do this all on your own. Come out and join me tomorrow morning as a student in our live trade room. Taking a look here at crude oil, crude is bearish, but the buyers are trying to reverse the trend this evening after a bullish response to the API inventory report. Buyers need to hold a pullback if they want to take control of this market, and sellers will be watching closely to see if they fail for a possible retest of today's lows. The bear wedge has already completed today, broke and retested, telling us to expect a bullish correction where sellers will be waiting for the buyers to fail at resistance. The bears also completed a measured move today with the double bottom reversal appears to have been successful, and now the bulls just need to hold this pullback to take over the trend going into tomorrow. On the horizon, we have the Department of Energy inventory report tomorrow morning at 10:30 a.m., so our window of opportunity tomorrow will be much smaller, of course, unless you're willing to gamble on the news. We got four main clues, main components on this chart here this evening as we go into a Wednesday inventory day for all you crude traders out there. First of all, we're going to bear wedge. A bear wedge tells us we're looking for selling opportunities down to the end of that wedge. As you can see here, we have pretty much squeezed every drop out of that bear wedge that we can get, right? Bear wedge tells us stick to the downside, and really what you want to do is when you start seeing a wedge like that, you want to start selling the high of that wedge, right? Using that as resistance. And if it does break free of the wedge, you want to look for a trap high, buyer failure, and then sell it right back down, right? The absolute target, though, for those sellers is down at the finishing point of that wedge. You can see, of course, tough to say if it definitely has completed that wedge. As you can see here, there could be a few different ways that you drew this channel off the high here. So, boy, it's really tough to say if it has or has not. I always say when it's that close to call, assume the worst case scenario. I'd rather be wrong and miss a trade, right, than of course try to force a trade when I am right and it has been retested, right, and take a loss because of it. So I will always err on the side of caution if I can't quite tell. Now, with that said, we also have a measured move. That measured move has already been completed. We talk about this in almost every one of our nightly newsletters. The measured move has already been completed. This is a great example of a measured move, double bottom reversal. A little trap low there. Buyers buy it right back up. And that response, right, that what we call a hit and run, that hit and run candle, it's a bear trap. That candlestick formation is a huge clue of what's likely coming next. Very, very strong move off those lows. This is where those buyers really have to hold that pullback if they're going to be able to take control of this market. Don't forget, measured move will be acting as support. If we break below it, it will act as resistance. Okay, don't forget those measured move areas. They're support when they're below, they're resistance when we're above. And then that could lead into a possible triple measured move here. Take off that A to B leg, bring that right on down, and that triple, as you can see here, puts us right at that double down here, which will be the next significant area of support as we go lower. So keep an eye on that 43 even, 42.89, 43.02, 43 even area. Definitely keep an eye on that area for a possible target if this thing continues to the downside here tomorrow. The third piece of this information I think is one of the most important pieces. It is the trading range. As you can see here, this trading range has a bearish bias to it. Price moves lower as it moves into that range. Okay, we see double tops. We see double bottoms. Take that trading range. Project it higher, project it lower, as you can see here right now, which I have in the chart, right? Trading range up, trading range above, trading range below. As you can see, we're just simply taking the size of that range projecting it up, projecting it down. As you can assume, areas overhead, 44.13, 44.50, that's resistance. Areas below, 43.02 and 42.64, okay, on the way down, those are going to be areas of support. Okay, so of course, we have a trading range, we have a bear wedge, and a measured move. Oh, one more thing about those ranges, don't forget about range rotation. High to low, low to high, high to low, right? We expect to see that high to low, low to high, high to low, low to high, right? Back and forth there. So if we do see price go back into that range, it's going to want to go back to the high, back to the low, back to the high. Most important thing right now, though, is there is a bear bias to that trading range. Last but not least, the last clue, not so much a technical clue, but definitely an important piece of this puzzle for tomorrow. We have inventory news. Like I talked about earlier, 10:15 a.m. is always the kind of official cutoff for me trading crude oil futures on Wednesdays, assuming, of course, Monday was not a holiday, right? If Monday's a holiday, it pushes that news event back till Thursday. But we're all good to go for tomorrow. Wednesday morning, 10:30 a.m. Eastern Time. 10:15 is our cutoff tomorrow, and then after the news comes out, give it 10 minutes. It'll be pretty whippy. If it's not whippy, it'll be incredibly slow and sluggish. But usually the inventory report produces a very, very volatile, illiquid environment. So be careful until after 10:40. Really be careful anytime after 10:15 tomorrow morning, because anytime after 10:15 on Wednesdays with inventories at 10:30 is considered gambling. Again, if you do want to trade it, though, make sure you trade tomorrow until 10:15 and then, of course, after 10:40. But be careful after 10:40 tomorrow. Here's what they want to see here tomorrow for the bears. First of all, bears have control over this market right now. But here's what they're looking for. Bears looking for buyer failure at resistance. Remember how this goes as the price goes higher, right? In a bearish market, we find an area of resistance. Price will correct back to resistance. And this is how the sequence always goes. Buyers try to buy the pullback. We know where their stops are. We look to sell into their stops. We call it a failure. Failures, if done correctly, lead to strength. Large follow-through candles. Failure into strength, strength into pullbacks, pullbacks now gunning for a new low. Very typical rinse and repeat. In a bearish market, I'm looking for a test of resistance, failure, strength, strength into pullbacks, pullbacks to a new low. In a bullish market, and we can apply this to other markets we see tonight, in a bullish market, find an area of support, look for a correction back to support. You guessed it, sellers try to sell a retracement. We know where their stops are. We look to buy into their stops. Failure. If you take the right failure in the right timing of it, right, making sure you get the right signal, you get some strength. That strength turns into a pullback, and that pullback, of course, now turns back into a new high. Failure into strength, strength into pullbacks, and pullbacks, of course, back to a new high. So now we look back here at a bearish market, right? The bears have this price going lower. I have lots of areas of resistance. 44.10 is the inventory number level. 44.13, 44.25, 44.35, 443, right? And 44.5, all the way up the food chain as we go. As we go higher, we never know which of these levels are going to hold. So what do we look for? Buyers to fail, failure to strength, strength into pullbacks, and then pullbacks on the way down, right? If we keep going higher here, tomorrow is inventory day. Now, a couple things here. When you're selling, make sure we don't sell directly into support. If we're buying, don't buy into resistance. This is one of the many, many benefits of being with me tomorrow, live in real time in our trade room, so you can simply learn by watching me do it, right? Watching over my shoulder while I always qualify to make sure we have the proper setup, the proper signal, and of course, enough room on that trade to make sure that we're never selling into support or buying into resistance. What else the bears want to see here? The bears are also looking for a breakout pullback below that range low. Now, this is always a tricky one. This is always going to be a tricky one, looking for a breakout pullback and hold below that low. That is definitely going to be the less reliable, right? If I have a choice right now between a failure at the high and a breakout pullback at the low, I will always take that failure at the high. That's always going to be the more